All right, today we're going to take a look at North American sales for cannabis according to Hedge. So we're going to look at about a dozen different markets, being California and Colorado, Nevada and Washington, and then Illinois, Oregon, Michigan. Up north in Canada, we're going to look at Alberta, British Columbia, Ontario, and Saskatchewan. So starting off with total sales, we're going to look at California, the behemoth that it is. So starting off with Cali, looking at $413 million for the month. That's a lot of money. So to put that into perspective, the total video game market for 2019 was $4.6 billion. Cannabis industry in California alone last year was 3.8 billion. So, albeit the video game industry, that includes hardware and software. The annual increase is 18% compounded annual growth rate for video games. So, pretty much California's cannabis sales are the equivalent of all of video game sales. So, pretty substantial. On the flip side of that, being that California is the fifth largest economy in the world, Saskatchewan up north in Canada, 12 million bucks. I think that's going to be, the regional equivalent in the US. The Wyomings, New Mexico just went legal. I would think that that would be kind of a monthly sales for a place like, New Mexico. But a major metropolitan city, Seattle, Portland, you're looking at for Washington 127 million, for Oregon 101 million, and these are markets that have been around for a while. So unlike Illinois that you're seeing at 110 million, it's already coming down. So January 115 million, February 121, and then match that last month and then back down to 110. So, the 340% of sales growth that we were seeing in Illinois is not going to be around. And it's not just because Missouri went medical and you're not going to have neighboring states, piling in, which is to some degree some of that. Again, we've had people in Washington come from Idaho and Oregon before Oregon opened up. I think this is more of hoarding and trying new things, and that's going to start coming back down. So again, the 340% of year over year sales growth we had in Illinois is going to be coming down significantly. And we'll get to that. How about right now? So you can see on this graph, Illinois easily 341% in January, 343% year over year sales growth in February, and then in March, back down to normal levels. So 85% last month. That's on par with Massachusetts at 84%. I think, again, looking at Washington at 10% and Oregon at 19%, those are kind of the numbers you're going to look at once the market has matured. So it's starting to come back down to normalcy. Unlike new markets in Ontario, 126%, although coming down. Michigan, 120%. Coming down, starting to cool off a little bit, but still super high. Nevada, 46%. Now that's a massive jump because year over year sales growth last month were 19%. So I think we're doubling that. I attribute that 100% to tourism coming back and doubling their sales. That's pretty significant. So California is only at 28% year over year sales growth, and that's down from 43% in February. So that could be people cutting back. Could be that people are moving out of the state. Could be a number of factors. But all in all, I think you should be looking at Washington and Oregon as kind of a mature market in terms of what your sales growth might be, somewhere between the 10 and 20% mark to match that of Washington and Oregon. Average basket size is interesting. So average basket is pretty simple. It's just the total revenue divided by total number of transactions, or in other words, the average amount people are spending. $67 and change in California. That's because delivery is $65. Let's go back to Washington and Oregon. So Washington $36, Oregon, $42. That's convenience. The top two decision makers for people generally when they go out and buy something is whether it's convenient and whether it's priced at with value. So that's what's really going to determine the cannabis industry. It's no different than anything else. So looking at average basket size, other parts of the country, Illinois was at $110 in January and February, dipping to 108 last month and 107. So it's creeping back down as people are figuring out maybe what they want. Maybe it is surrounding areas like Missouri now that they have medical not coming over. Don't know. I'm going to attribute that more towards people have figured out what it is that they want, what it is that they want to try, and where the value is in between. Massachusetts, on the other hand, holding steady at around $92 for an average basket size. Unlike Saskatchewan at $44 or California, again, $65 at that delivery range, kind of making that price where it's at with minimum delivery at $65. In terms of total baskets, the total number of transactions in any given month, California dominating 6.1 million transactions in the month, in last month. So looking at Washington and Oregon for a more normal environment, Washington had 3.4 million transactions. Oregon had 2.3 million transactions. If we look at Saskatchewan as rural America, 200,000 transactions, and Illinois at a solid 1 million. So you can see here from Illinois at a solid 1 million, but California being the beast that it is, taking the cake at 6.1 million transactions so far just in that last month. So brand concentration is interesting. It tells us who has the most concentration, but it's essentially the percentage of market that the top 10 brands make up. And so when we look at California, 27% concentration, it's not, that's not bad at all. So Washington has the most brands out there. We're at 23%. Oregon is at 24. So unlike Nevada, where it's more of a pay to play, it's going to be more expensive. They have end caps where they're going to sell $50,000 or whatever. So 43% is a brand concentration there. It's not very good. Up in Canada, it's the same issue. You have really high concentration. So top 10 brands hold about 37% of the market share in Alberta and 40% in BC. Don't have much data for the rest of the areas here for brand concentration, but looks like it's pretty much between 20 and 40%. So there's some room for that. There's going to be a lot of companies that go out of business, no doubt, as people kind of try new things, what works, what doesn't. Hopefully coffee will be in the mix and in the SKUs eventually, not right now. So there's a lot of maturity and development that needs to happen. And most of that is just going to be in the US, being able to cross state lines. Things like beverages are really expensive. And so it just doesn't make sense to replicate that in every single state. So there is a ton of automation coming out, pre-rolls and joints. And as soon as there's cross-border, you're going to see a proliferation of investment and innovation and consolidation, massive amounts of consolidation. And so it's going to really bring the price down from, maybe $1,500 for a good greenhouse outdoor per pound all the way down to a couple $100. So I'm expecting $500 per pound at the high end in just a matter of a couple of years. So don't know if that's going to be true or not. You're going to have to come back to the Talking Hedge and find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.